With the current credit crisis, Alta Group consultants are advising a return to basic risk management principles. Joe Boland, a leading risk management expert, has decades of experience in both banking and credit management. Most recently as Chief Credit Officer at IBM. There's something that he has seen preceding every crisis: the gradual discounting of basic risk management and an overzealous appetite for growth, and a degrading of pricing and terms for creditors.
Since the fall of last year, there's really been I would say, reaction and a partial correction to some excesses the last couple of years. The specifics really started in the subprime mortgage market and it rolled into the credit card market, and now I think we're spreading to the structured financing market as well. It's likely to also hit eventually the equipment financing business. And in fact, many deals that had gotten done last year in the, let's say, the structured financing and probably even the equipment financing business are not getting done today. The risk appetite is adjusted rather markedly.
Mr. Boland advises looking outside your own business area for signs of spreading problems.
They should be alert to a lot of requests for refinancings. They should be looking at whether the banks are withdrawing from some of their customers, and also look for a pattern of public company downgrades. This will tell them that this is really in fact spreading to their customer base. Hopefully it won't, and it'll depend a lot on the specific company and the specific customer base. But those are some of the things to look for in the short term. We've seen in the last cycle rather distinctly, not an outsourcing of credit decision making, but a partial abdication by some institutions and some companies of their credit decision-making process by relying too much on a bank sponsor in one hand, or on the other hand on a agency credit rating. These should be viewed only as inputs to your own decision. And your decision has to be done based on your own analysis, and referenced against your own risk appetite, your own capital, and so forth. So make sure that you don't have a culture where if something is brought to you and it is purported to be triple B credit, that it automatically gets approval. But I think most distinctly, the thing that sticks out in my mind between the guys that have done okay and the guys that have not done okay has been the senior management involvement in the formulation of the policies, the development of the infrastructure, and then the actual running of that operation.
Look for the Alta Group's next broadcast segment on what makes renewable energy financing possible.